Speed of market discovery is basically the difference between success and failure for startups. And I think if you can understand the contours of what the market wants faster than others, you can probably, have a good chance of finding success. But sometimes we forget that what's the beauty of the internet is that you don't have to ask anybody's permission to go and build that and put it up on the internet and go and try to find customers for it. But you could imagine, if your only option was to make an app and then, Google or Apple, for whatever reason, felt like it wasn't something they wanted to have in their app store, you can have a business.
Hello and welcome to Between Two COOs. I'm your host, Michael Koenig, and before we start, I want to read part of an email that my guest sent me several years ago. Quote, I also don't think it's crazy to try and create content around being a COO. Maybe start a newsletter or podcast where you interview COOs about what the job is like. Everyone wants to talk to CEOs and founders, but COOs are the unsung heroes, and I bet people would love to get to talk about their role. End quote. That's right. My guest today is Peter Rojas, the person who planted the seed for Between Two COOs. And if that name sounds familiar, Peter founded Gizmodo and Engadget, two properties that didn't just cover technology, but they shaped how people understand it. He's been an operator, an investor, and a builder inside companies that operate at real scale, like AOL and Meta. And today he's at Mozilla working on what comes next. Throughout my career as a COO, I've run into some problems. One of them being, once a company gets big enough, the challenges stop being ideas. It becomes about coordination, execution, knowing when to commit, when to shut down something, especially when the costs of being wrong are real. Peter has lived this for a long time, so this conversation isn't just about trends. It's about how large organizations actually make decisions, what breaks as they scale, and how operators decide what earns more resources versus getting killed. Peter Rojas, let's get into it.
Hi, thanks. And I get a royalty on every podcast, right? That's how it works.
Oh, crap. All right. Well, I do have a sponsor. And this is actually the perfect episode to mention it because Peter's original advice to me was, quote, start a newsletter or podcast about the COO role. I did the podcast and now I'm adding the newsletter. If you want practical stuff around these conversations, guest takeaways, operating patterns, and some of my own notes from being in the COO seat, go to B2COO.com and subscribe. The podcast is mostly me interviewing other people. The newsletter is where I get to add my own thinking. Well, like I mentioned, you've worked across startups, AOL, Meta, now Mozilla. Very different systems. What actually changes in how decisions get made as organizations move from scrappy to massive?
Yeah, the way that I like to think about it is that when you're doing a startup, as you know, you have this challenge that you have to do, which is you have to show enough traction or signal to be able to prove to investors, whether it's your existing investors or new investors, that you can keep going, right? And have sort of a shared understanding about what do your milestones look like. And one of the things that, I may have talked about this with you and Hunter when, we talked about Lunar and / Suite, which is that for every stage of an investor, what they're thinking about is what gets the next stage of investor to write a check, right? Mm-hmm. That's their KPI or their benchmark. And so, you have to sort of understand the psychology of not just the investors that you want money from, but the next stage of investor, right? Whereas when you're building internally, you don't have this way to kind of go and test the market and get external validation and sort of see what's out there. You have to essentially get your internal stakeholders, whether that's, in some cases it's a person like me, right? The person who runs a new products organization. Sometimes it might be the CEO or the CFO. It could be a committee. It could be the board. You have to sort of explain to them, hey, we've seen enough traction with this idea, and to be able to communicate that. In some ways, you have a similar challenge in that, you have to be able to demonstrate that you're on the path, but you only have basically one person or one constituency that you can go to for that additional capital, so to speak. And oftentimes, they're going to want, before they even approve an idea in the first place, is to have a much better, much more laid out sort of path of milestones and what you're going to hit and what this looks like. And that doesn't acknowledge that, progress can be very nonlinear with a startup or a new product, right? It sort of feels like you're bumping along, you're pivoting, you're exploring, you're trying to do market discovery, you're trying to find product market fit. And then even when you hit product market fit, it's not always up and to the right. Right. There's still a lot of things you need to do, optimizing the product, figuring out flows, trying to figure out, what's the most leveraged dollar you can do in terms of acquisition. So it's not that like it's sort of you hit the singularity and then your sort of job is done.
Yeah.
And so I think that one of the challenges that I have is trying to make sure that the people that I'm accountable to, rather the CEO, the board, other members of the C-suite here at Mozilla, is to help them kind of understand what that process looks like, and how we have to essentially invest ahead of traction. Because we don't have the luxury of being able to sort of just go out to the market and test and get validation from going and talking to 100 different funds. We have to essentially sort of be comfortable with a different level of risk than the typical product development process that you might see at just established products. So it's a bit of like, having to educate, and communicate, and not having, again, the option to be able to just sort of say, I'm just going to go out there and get feedback and see what happens.
So is it easier because you work on new products? So you were doing this at Meta, now you're doing it at Firefox, but you did it before in independent companies. Easier to do as a free agent, or easier, more fun, different challenges? How would you consider it?
Definitely different. I think that you have some advantages and disadvantages, right? I mean, if we're doing an enterprise version of Firefox, for example, you get a big step up there, right? One, besides the fact that we can build on top of Firefox, we get to leverage the brand, the network, the existing set of relationships, those sorts of things. So, with things that we're building, we often try to think about, and this was the same at Meta, same at AOL, what are the unfair advantages that we can leverage in terms of this stuff? I think you also have to understand that can only take you so far, right? It's not, when I was working at Messenger, it was a very different process of thinking about how we define success when you're introducing a new feature or making some incremental change to a product versus like doing something that is really standalone and 0 to 1. So it's the to me, like, one of the biggest challenges is that as a VC, you have a portfolio of companies, and each BetaWorks fund, we usually had about, I don't know, 60 to 75 companies, something like that in each fund. You expect that most are probably not going to work, and that you'll have, the model is typically like, a couple of outliers, a handful of sort of like, base hits, do well, but aren't going to necessarily like return the fund. And then a lot of things that, get acquired at cost, and then an even greater a number of things that don't work at all. Right. At a big company, even as big as Meta, at one point, I think the most number of products I had is maybe 14 or 15. I have 8 products in progress right now at Mozilla. I really wish I could do 25, 30, a year. And I think that there is something about it being a numbers game that makes it more challenging. And so it creates a higher opportunity cost for what you do. And so, you often have to do a little bit more work to initially validate a concept and sort of understand the market opportunity than you might do as a startup founder. What we don't see often, what you don't often see, is that it's not just who goes and is able to raise money and not able to raise money. There's also the many more times that of products and concepts and ideas that people start working on and then never even get to a place where they themselves have enough conviction to even try to raise money for.
Right.
So I think that we forget that, like, there's like, the top of the funnel is gigantic. It's every idea that, you and I have ever thought of where we're like, I'm probably not going to go out and, and do that. In the corporate level, we have to do that too. We have to evaluate ideas, but our ability to like meaningfully explore them and validate them is just, more constrained because like we can't go and do, I can't go do 50. I can't go do 25. I can do a handful per year. And so I have to have a little more conviction around them, knowing that unfortunately the risks of them not working are about the same as they are in the regular, non-corporate innovation landscape.
Well, just a brief note for listeners. I did leave out, Peter was a founder of BetaWorks and was a VC. I worked with Peter, maybe almost, feels like a decade ago.
Almost 10 years ago, I think. Yeah. It's kind of great.
So Peter's also bringing the lens of a very successful VC to this. Now, Peter, you talked about doing 8 products right now. You'd love to do 25 to 30.
Yeah.
It Let's talk about AI, because it
Yeah.
feels like we can now. And I guess this is timely. I don't know that I'll be able to get this podcast out before your application window closes, but you do have Mozilla Pioneers right now. Like, talk to me a little bit about this. I'm not going to explain it. I'll let you do that. But also, I'm curious, with the tools that are out there, what is preventing you from doing 25 to 30 products?
Yeah. So it's a great question. So it's I'll talk about Pioneers first. So Pioneers is one way that I am trying to solve this top of the funnel problem, right? It's a program where we're going to invite builders to come and spend a couple of months with us. It's a paid program. You can do it part-time. You don't have to quit your existing job to do it. You have to get your existing job's permission. They have to be cool with it. If they own all of your work product and IP, then, you can't do this, right? Because, we don't want to create any conflicts down the line. But it was kind of came from a realization that with vibe coding and the ability to use AI tools like Lovable and Replit and others for prototyping, a process which might have taken 6 months, 9 months, and having to give someone, a founder, maybe a couple of engineers, front end, back end, and a designer, uh, you know, I essentially can, have someone prototype their ideas in hours, really, and sort of try to at least get some understanding of what it is that you want to build. Um, I think that, like, you still, even though you can get, I think, to prototype and express those ideas more quickly, I think that there's still time that you have to be in the market, right? And as a big company, or big-ish company, we're not that big, but we're not tiny. There are processes that we still have to follow. Like, things have to get cleared with legal. At Mozilla, because we are backed by a nonprofit and we are mission driven, we do have a lot of values that we don't compromise in the way that we build. So, we go to above and beyond to protect, user privacy, to be transparent, to, utilize and build open source whenever we can. And so that does slow things down a little bit. And one of the things, though we do use Cloud Code and other tools, in production, it doesn't mean that we, cut any corners in terms of making sure that we're shipping like safe, secure, products that aren't going to compromise in security in any way. So there's that part, right? I think the second part is, is also, even if you can make the prototype, you still have to do work that can take time to fully understand and do the segmentation of your potential customers. You want to talk to customers. AI can help you sort of identify who to talk to and maybe what questions to ask, but there's nothing that really is a substitute for a founder getting on the phone and just talking to people. Maybe it all becomes AI to AI or something like that. Like, I don't want to discount what might happen in the future there, but I think that there's just work that you do need to do to be able to do that, to be able to understand what you really want to build. And so I think that, the thing that I always tell my teams here is speed of market discovery is basically the difference between success and failure for startups. And I think if you can understand and figure out the contours of what the market wants faster than others, and then give them what they want, you can probably, have a good chance of finding success. But it does take time to get feedback from the market, even if you can iterate more quickly in response to that feedback. So my goal is, like, I think that we will be able to use Pioneers to, like, expand the number of ideas that we consider per year. But I want to, but there's a difference between consideration of idea and then having enough conviction to, like, put it out in market.
Well, it's interesting, the speed of market discovery. And this becomes much more difficult when you have a name that, well, any big name, but especially a brand like Mozilla that we all have a lot of affinity for behind it, right? Because Mozilla, we're getting back to risk. And so it's much easier for someone with no name behind it to go and put a bunch of different things out versus Mozilla, to your point, safe, secure products. It's almost one of the things that worries me whenever I see the latest and greatest AI tool come out. I have like a list of 12 questions that I just copy paste and drop to their support people just about security and how my privacy is used. I wouldn't have that problem going to Mozilla. So it actually is almost a benefit, or rather a leg up.
Yeah. I think that, we want to be a company that you can trust the things that we build and make. And that we're going to center the user, the customer, because we're not just a consumer, right? We have enterprise products, and that you can trust us, that we're going to center you, and that we're going to prioritize you. And that, again, we're not a public company. We don't have shareholders. We're not backed by billionaires or run by billionaires or anything like that. And again, I don't want to disparage, because I use plenty of things made by the big companies, and I worked for one of them. But I think that, like, our incentives are just different, right? And our long term alignment is different. And fundamentally, we have this legacy of really wanting to make sure that the internet remains a public good and something that everybody has a chance to participate in. And I mean, we were talking before, the podcast about something that you're working on, and I'm like, I think sometimes we forget that, like, what's the beauty of the internet is that, like, you don't have to ask anybody's permission to go and build that and put it up on the internet and go and try to find customers for it, right? But you could imagine if your only option was to make an app, and then Google or Apple, for whatever reason, felt like it wasn't something they wanted to have in their app store, you can have a business, right? And so I think that, like, we fundamentally, you know, believe that the internet needs to stay open, and it needs to be something that everybody has a chance to participate in and shape.
I love it. You're taking me back to my automatic days when we had very
Oh,
similar
absolutely.
beliefs.
A lot of similarities between that and I think Matt's vision for WordPress, really, came from a very similar era of the internet.
Yeah, absolutely. Well, let's talk about these eras of the internet. I mean, you, Gizmodo and Engadget, you've seen multiple tech waves up close. We're talking blogging, Web 2.0, mobile, social, VR, AI. What felt similar going into those moments, and then what genuinely feels different this time?
Yeah, I think one of the things that I've seen is that if you go back even to, like, the era of kind of mainframes, that every time we have a transition with the we go from, like, we have a sort of a interface transition when we go from mainframes to mini computers, and mini computers to PCs, and PCs to mobile, and mobile to, like, I guess, AI, right, that we have right now. That every time we do that, we initially start with this phase where people sort of try to port over the user experience paradigms of the previous previous wave, right? And so if you go back to, like, I'll use the example of mobile. If you go back to, like, pre-iPhone, um, most mobile phones, or a lot of them, kind of felt like they were trying to shrink down the PC desktop into, like, a little screen, right? And it didn't really work, right? You had to sort of reimagine and come up with something that felt completely native to mobile. And I think one of the things that I find really interesting about AI right now is that we're still figuring out what does it actually mean to have interfaces and workflows and experiences that are actually truly native to AI, that aren't just us, the kind of that aren't skeuomorphic, in the sense that, like, we're trying to take, like, what we already know and sort of, like, fit that into the existing framework. And so it's a real challenge. But one of the things I've seen is that it makes it very difficult for the incumbents from the previous generation to dominate the next one. Now, AI may be an exception, right? It may turn out that, like, Google ends up, just winning because, for all sorts of reasons that you and I could probably both enumerate. Um,
Right.
but I do think that, like, one of the things that I love about technology, and disruption is sort of a, cliche now word to say, but it does, it does shake the snow globe, you know what I mean? Or the etch a sketch, whatever metaphor you want to use. And you're kind of like, oh, like, things are up for grabs again. And that's why I got so excited about blogging in 2000. I got him started blogging in 2001, and I was like, hold on a second. If, when I worked at Red Herring, which is a magazine that covered technology in the late 2000s, we paid $1 million for a CMS, a content management system. Now, as you know, within a few short years, Matt made that free with WordPress, right?
Mhm.
And when I saw that you could publish, and anybody could publish now, anyone could have a publication, that all of a sudden the things that mattered were not going to be, did you have access to a printing press? Could you afford $1 million CMS? Could you afford the servers? all those things that really mattered, up until they didn't matter. And it meant that like everything was up for grabs again. And I went for it. And I dove headlong into that and created, some big brands that took advantage of an entirely format that felt native to that. Gizmodo and Engadget weren't trying to be magazines or newspapers. We created something that was totally unique and new.
And a different business model as well.
Different business model, different voice, different style, different publishing cadence, different pace, all this stuff. Everything was like really, really, like I said, it felt native to, to the web and to blogging.
Yeah, it's fascinating. And I kind of want to tie this into some of your time at Meta, and you may or may not be able to talk about this, but, you spent real time there during the big metaverse push where I think Mark put in 14 billion. And that was seen as like this astronomical investment that was blowing everyone's minds. And now he's effectively betting the farm. I don't know if you saw this in the most recent earnings.
Yeah,
he's putting up every dollar of their free cash flow, 132 billion on AI.
Yeah.
From your vantage point, like, how do you think about the difference between those two bets?
Yeah. So, the genesis of the investment that he made, it's funny, he changed the name to Meta like 2 months after I joined, which is kind of funny.
Yeah.
So, not that it had anything to do with me, but the genesis of the focus on, the metaverse and, VR headsets and all this stuff was, kind of talking about what we talked about earlier, like, about not wanting to be dependent on, these big platforms on Google and Apple. Mark didn't want to be in a position where Facebook and, that became Meta, right, was sort of at the mercy of the companies that made the devices that people, consumed Instagram or used Instagram, WhatsApp, et cetera, Facebook on. And so a real strong desire to be able to like, as we talk about these paradigm shifts, to capture the next wave, right? And to own that. And I think there was something that strategically, from a strategic sense, you're kind of like, if that's going to happen, then yeah, like, you don't want to keep missing, these shifts. And, we know that Microsoft tried really hard to actually be successful in mobile and ended up not being, and kind of had to seed the market. But, there are a lot of people in 2002 who thought like, sorry, sorry, Nokia, like it's Windows going to grind you all to dust, and so there's a logic to that bet. But that bet was predicated on users actually adopting VR headsets at a rate that never materialized. And, I'm someone who, I invested in VR companies, invested in Rec Room, which is probably one of the most successful consumer, VR companies, and they were as successful as anyone could have been, but, didn't turn out to be a gigantic company. The fact is that like, it was a bet, it didn't materialize. And I think now, at least from my understanding, and I have to be careful about what I know from when I was there.
Yeah, right.
Is that there's a real desire now to, whether you get to AGI or super intelligence or whatever you want to call it, that similarly, Mark doesn't want Meta to be boxed out, constrained, if in a world where like OpenAI and Google, end up winning, right? Now, I think that there's a lot of ways that you can decide what winning matters, and and all that. So I understand, at a high level, like, you probably don't want to lose to them, but I think defining how Meta wins, I would probably take a slightly different approach than what he's doing right now.
Okay. You're running Meta. You opened the door there. You're running Meta.
So I think one of the challenges is that, everybody sort of has this perspective of, well, the race that needs to be won is that everyone's going to have like an agent, and that agent's going to do things for them. And whoever, creates that agent, right, is probably going to like, that's the future, right? I think that may not be quite as cut and dried as, as it seems. Or at least what I'll say is that it's not clear to me that the average person necessarily wants Meta to be their agent. Versus honestly like a Google, which, has more kind of productivity type of experiences, right, with email and calendar and those sorts of things. and search, which is very utility driven, right? You
Mm,
don't search for entertainment. You might search to try to get to entertainment, but you don't search as a form of entertainment for the most part. Whereas Meta's bread and butter is more on the entertainment side of things, right? We think about Instagram Reels. There is some social utility with WhatsApp and all that,
mhm,
but very hard to monetize. And so, I think it's interesting to see how Apple has, in a way, sort of sat out a little bit,
mm,
and felt like, hey, we have the devices, we have the billions of users, of handsets out there, etc. We can afford to wait and see a little bit more, and I think that like Meta runs the risk of like overbuilding on the data center side. They're taking a
mhm,
lot of debt to be able to get there, but also that there's a risk of underinvesting actually in the place where they make the most money, which is around the ads business. And
right.
so I know that they are investing more, but you could imagine a world where they say, actually, we're going to constrain a little bit how much we invest in trying to get to super intelligence or AGI, and we're
Mm,
going to invest more in optimizing our ads and building up that business and getting so great there that like no one can compete with us. Uh, and then as the market around AI we start to get a better sense of exactly where what consumers want, whether it's agents or whatever it is, we can lean into that. And I think Anthropic has actually been really smart here, where they've sort of seeded the consumer market and focusing on coding and more enterprise stuff, and have found a great lane for themselves, and may turn out to be a better long term business than OpenAI even.
yeah, absolutely. Especially now, those Super Bowl ads that they dropped earlier before the Super Bowl
Yeah,
are just absolutely epic
yeah,
in terms of ads coming to OpenAI. Um, no, it's really interesting. And one thing, a lot of people think about um, Meta and VR headsets as maybe a fail as far as Meta goes. But keep in mind, I think it was like the Quest sold like 20 million headsets.
yeah. It's not
Like
nothing.
it's
Yeah,
yeah, it's not nothing. It's astronomical, and like if you compare it to, I don't know, gaming consoles, like it's right up there. It's
yeah.
insane.
I think the problem is that they didn't want to make a gaming. They need, like, if you're going to build a gaming console business, you need to structure
Yeah.
the investment differently. And I think they thought it would
Mm,
be, we're going to sell like 200, we're going to sell hundreds of millions of these headsets a year eventually.
yeah.
And they didn't obviously get to that.
Yeah.
And I think, to be fair again to Mark, I think if you go back to like 10 years ago, 2016, I think a lot of people were like, hey, this is the next big thing.
Absolutely.
I have multiple VR headsets. You know what I mean? Like
Yeah.
I spent a decent amount of time in VR,
Yeah.
I was like, I don't know, this seems pretty cool to me.
Yeah. I got a Quest. I put it on. Gosh, she must have been 5 at the time. My daughter, and I was
Yeah,
like, "This is your future." And
yeah,
as like a elephant, like stepped on her,
yeah,
because she was immersed in the African savannah.
yeah,
Well, we've gotten all of the operators that are listening to this are like, "What the fuck are we listening to?" Because this is not. But I love this conversation. But come and I never curse too, which is really strange. Coming back to your experience as an operator, I'll be a product guy.
yeah,
Coordination is an operational problem that we COOs and the listeners often get pulled into when like the strategy is clear but execution stalls.
mm, yeah,
And in larger orgs, at least in my experience, it's usually the limiting factor. At Meta, Mozilla, your experience, what specifically has made coordination work, and what was the thing to break when it didn't? And I
yeah,
say this because these are enduring companies.
yeah.
Processes are there.
One of the things that and if you maybe talked with people who've worked at Meta, that one of the challenges is you get a couple things. One is you don't always have enough clarity around who's the decision maker, or you have a decision maker who wants it to be bottoms up, um,
Hmm.
rather than actually just sort of being very clear at the outset of like, here's our objective, here's what I want, here's how I'm going to make a decision, right? And so you often, this was not a unique experience for me, I think, or a lot of others there. You sometimes be in an alignment call, and there'll be 40 or 50 people on this call. and you'll be going around and people will be, chiming things in, and you'll have enough senior people on the call that the more junior people will basically almost be assigned things in real time. It'll be like, well, I had this idea. Have you looked at this? And then now like a PM has to go spend 2 weeks running something down that probably won't matter, to be honest. But it's
Yeah.
just to satisfy somebody senior on the call who happened to like say, have a notion of like something that we maybe need to explore. And so I think we've all had those experiences. And I'm not saying that's obviously Meta is successful and gets things done. So it's clearly like decisions get made and, at some point. Um, but I think that like you can see how things can get really bogged down. And so, one of the things I'm really obsessed with is just having real clarity about, what it is that we want to do. And then the specifics of like what is expected. And so I'm always just pushing, hey, I was just, we're putting together like a board deck right now, a great example. I was like, I just want to understand, I just want to make sure like, I'm going to take this slide, but like the other slides are going to be handled by these other people, right? Just like, it's sort of like a pedestrian thing.
Mm.
But I think as a leader, if you're modeling, like, just get granular when you need to, because I think we forget that a lot of like junior people, and sometimes either ourselves as more senior leaders, um, we kind of assume that like people can fill in the blanks, or that we ourselves are going to fill in the blanks, or we're going to fill them in correctly. And I
Mm-hmm.
love just like getting very, very clear who makes the decision, what's at stake, what are the things we're considering, what's the time frame for doing this. And so one of the things I do like about Mozilla is like there's not a lot of like preciousness that sometimes leaders do, where they kind of got to put their fingerprints on something before they feel like it's worth, like people are just like, it didn't have to come from me for us to be able to like move forward. There's not a lot of like, and I saw this a lot at Meta, where you put together a proposal, like a strategic document, and I wrote lots of these where you're like, it's like 35 pages, right? Of like, you're laying everything out,
Mm-hmm.
um, and the roadmap and all the things and the trade-offs and the justifications and all, and then it'd be like, every senior person had to like, above me, whatever VP or whatever above me had to like, they had to like change it and put something into it and tweak it. Um, and you realize like, it's not really in service of like making the decision or the outcome different or better. It's just
Right.
to be able, like, it was just to be able to like feel like maybe they were doing their jobs or something like that. And I don't get a lot of that here. People are like,
Yeah.
you know what? I could spend, I could make you go back and forth on this. Maybe it makes it a tiny bit better, but like we don't have time for that. We got jobs to
Right.
do. We got work to do. And I really like that about here.
Well, it's also people put in those touches so they feel like they're earning their paycheck and
Yeah,
justifying why they're there.
and I think if you're that insecure about your position or your job, either you're not great at your job, and I'm not, or you're working at a place that tries to make you feel uncomfortable and insecure. And Meta is notorious for that. Like they kind of want people to be anxious, and and scared a little bit. And I just think that I think it works until it doesn't. And I don't think it's a healthy way to operate. We want to work with urgency, but I don't want people to be freaked out. Like it's like, you know, everything is doable. That's why I always tell my team. It's like every, if we do our jobs properly, everything that we have to do should be something that we know we can accomplish. I'm not saying that like we might not to get a little lucky, or that we can have stretch goals or whatever, but like I don't think there's any value in um, you know sort of setting a goal and then not doing any of the work underneath to sort of actually outline, how do we do this? How do we anchor this business objective to the specific things that we're going to do? And so one of the things that I always try to like, check with myself is like, I need to be able to like zoom out and like understand and articulate the vision. What are the business goals? What do we want to do? Um, but then I need to be able to like, drill down and be able to understand like the actual execution and strategy. Doesn't mean I'm doing it myself. Um, but I need to be able to understand and make sure that the people that are charged with doing the execution know what they need to do to be able to get there
And have focus.
and have
So
focus.
often, especially listeners on the show, uh, we will be working for CEOs,
Mm-hmm.
and much of the time we are there as the filter to keep people focused so that when our CEO comes and says, "Hey, look, I found this really amazing AI tool, check it out." It's like, no, 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 no. If I send this to anyone, especially coming from me, let alone you, they're going to drop everything and go
Yep.
start looking at this. And it's just a giant distraction.
Yeah.
So much, it sounds like Mozilla is doing a great job of keeping an eye on the ball, which is the finished product.
Yeah, I think so. We have a new CEO who started in December, who was previously the head of Firefox, and I think Anthony's doing a great job of bringing a lot of discipline and focus, and making clear that, like, again, we want to be ambitious, but we have to also make tough decisions about what we want to do and what we don't want to do. Um,
Hmm.
and similarly, we have a new COO. We actually didn't have that role when I joined, and we have a woman, Suba, who'd been previously running like a handful of different groups and consolidated some things under her as a new COO. Um, and again, I think that, like, what I really respect about the way that she approaches her job is that, um, if we don't have the right executional processes and cadences in place,
Mhm.
all the things that we want to do, all the ambitions we have around the product work and other things, um, you know, those aren't going to happen. And that, like, it might not be glamorous,
Mhm.
but, like, yeah, we got to make sure that, like, we have the right tooling and the right infrastructure and, the right, like, HR processes and all this stuff. And like that foundational work makes a really, really big difference.
How does Mozilla run? Do you guys have an operating system, OKRs, or something like that?
So the way kind of that we set it up is we have these sort of high level goals that we articulate, and then we translate those into KPIs. And we have a set of KPIs, and like a lot of places, our success or failure of those KPIs translate into, like the overall kind of annual bonus, corporate bonus um, system, right?
Hmm.
Not That's pretty typical, I think.
Mhm.
And then as we think about KPIs, individuals have to have their own individual goals, have to ladder up to those KPIs. I'm C-suite, so like my goals are just the KPIs that related to my organization. There's no, it's sort of like either I accomplish those or I don't, right? There's not a lot of mushiness there. But you can imagine, like, for others, it's like, well, how do I deliver impact towards those KPIs given, like, my scope and function of my role? And I think for some roles it's easier to translate than others, right? As a PM, you're sort of like, well, like, if the goal is to move like Firefox DAO, like, I can pretty clearly, like, no,
Hmm.
understand what I need to do. I think if you, are like in finance, that might be a little more indirect, but
Mhm.
that's how we organize, our work here.
Thanks for the in the weeds question. I would have kicked myself further down the road if I didn't ask it. Well, Peter, I know we're pretty much at time. It's time for my last and favorite question. We've all had those moments in the C-suite or investor chair, whatever it may be, where we've seen just something completely off the wall, and we've thought, I never thought I'd see that. Do you have one that you can share? And maybe it's about me and Hunter, but hopefully not.
It would be, no, it's not about you and Hunter. I only had really great things with Hunter and you. But I remember you said, be prepared for this one. And so I thought about something that happened when I was an investor with BetaWorks. And, we were pre-seed investors. We were like one of the first investors in Lunar, right? Like, if not maybe we were pretty early.
Pretty
And
early,
so we're
yeah.
pretty comfortable with, like, hey, it's a couple people in a really early prototype, very early, and we know that, like, there's going to be pivots, changes. It can be a meandering path, right? So super comfortable with that. So we invested in a company, and they were doing something like some analytics thing, and kind of was, again, not unusual. Like, it wasn't a rocket ship, right? They're kind of trying to figure it out, and the investor updates that we're sending were getting increasingly vague. Maybe is a good way to describe it. And finally, like, after a few months of that, I was like, let me catch up with the founder. And so I ping him, I was like, hey, let's get coffee. Like, I just want to kind of understand what's going on. Like, it's not really clear from the updates, and trying to make sure I can help, whatever. He's like, yeah, let's get coffee. So we go out, and he's kind of explaining, but like being very unclear, right? And finally, I just said, because I have no problem saying this, I was like, I don't really understand what it is that you're doing. Like, I just help me, like, maybe you need to like break it down for me or something. He's like, oh no, 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 I'm not going to tell you. I don't want you to
Oh.
know what I'm doing. We're pivoting, but I don't want BetaWorks to know. And I was, yeah. So you know what I'm talking about. And I was like, wait, hold on a second. I was like, first of all, I was like, one, like, we're on the same side, we're on the same team. Um, you know, I have a confidentiality agreement. I was like, I have no interest in like sharing what you're doing with anyone outside of my firm, like in my fund, um, but also I have information rights in our investment agreement. Two, I can't help you if I don't know what you're doing. And then I said, in three, and I'll be honest, this is so unusual that when you go out to raise more money and other investors do their reference check with me, I can't recommend you because this is crazy. uh, just to be clear, like this is something I was like, I've never seen anyone do this.
Yeah.
It's like, well, that's just how we feel. This like we don't want people to know what we're doing. He was like really, and I was like, okay, look, it's Friday afternoon. You're first time founder. I have my partner meeting on Monday. It's at like 11 a.m. If you just walk this back by 11, I won't bring it up with partners. Never happened. Inexperience, whatever. We're good. We're cool. Never heard from him until a year and a half later. He's trying to raise more money, and I wrote, I was like, sorry. First of all, you're not getting more money from me.
Yeah.
But two, my relations with other investors are based on me being credible and honest with them, and I can't recommend you in good faith. And they went out of business, and not because I didn't write another check. I think it just wasn't. But it was like,
Sure.
I just have never seen that before since.
That is madness.
Yeah.
I've never heard that before.
Oh, I know.
That's amazing.
And I had to tell my partners, and they were kind of like, wait, everyone in the meeting was just like, what happened? And I was like, no, I'm not making this up. Like, he won't tell us what it is that he's working on.
Did you ever find out?
No. I mean, some other business analytics, something or other, But yeah, people can be very weird about this stuff, and I think that there's like even a bigger lesson than that, which like I've enshrined, is that like there's a couple things. Are one, nobody really cares what you're working on. If it works, everyone's going to copy it, and if it doesn't work, it doesn't matter. And the other thing, is, and I told this to somebody that was raising money, because they were being a bit like, oh, we don't want the idea out there. And they were like telling me, because they're pitching me, but they're like, oh, we're really careful. And I was like, you have it all wrong. Here's how you should be talking to investors. You should be like, I don't care who knows our idea, because my team is so good and is going to execute this so much better than everybody else that I don't care who knows. And that makes an investor want to get a checkbook out, to be like, okay, these guys, like, I love that confidence,
Absolutely.
And now I'm like, honestly, I don't care if my ideas are out there now. It doesn't matter. It just doesn't matter.
Yeah. That's awesome. Well, that's definitely crazy.
Let that sink in. Let's sit with that.
I mean, that's crazy. I wonder what they're up to now.
Maybe I should check LinkedIn.
Yeah.
It's probably going to say stealth. So
That's amazing. That's amazing. Well, we'll be sure to post that update at some point. Peter, this has been awesome. Thanks so much. Where can people keep up with you?
So it's funny. I do have a personal website, roj.as.
You haven't updated it since 2021.
I know. I haven't updated in a long time. I'm on Blue Sky, at roj.as. That's what I use the domain for Blue Sky. I'm on LinkedIn. I think it's just /Peter Rojas on LinkedIn or whatever. I'm easy to find. And then I think LinkedIn and Blue Sky, those are the only two things I'm on now. So
Perfect. Sorry to call out your lack of blogging.
I know
It's all right.
I should be better about it, but yeah, I got to get back
It's
to it.
it's tough to do. Also, it's easier than ever because of AI. Like I have I'm cranking out blog content as lead magnets for this new thing, and I have no problem sharing what it is. I'm not protecting the idea or anything. But
If you could tell me, that would be great.
Yeah, I can't. I don't want
No,
BetaWorks to know. I don't want Mozilla to know. You guys. All right. Well, beautiful. Well, there you have it, folks. Thanks for listening to Between Two COOs. Subscribe on Apple Podcasts, Spotify, or wherever you're listening. Visit between2coos.com for more. This will be on YouTube. Yes, we've started putting things on that thing called video, which I was very opposed to for the longest time, but we're on there now. And if this show has helped you, leave us a review on Apple Podcasts or wherever so others can find these conversations. Until next time, so long.